We've got a lot of folks that are coming in with contracts that are getting concessions, and we're using those concessions paid by the seller to buy interest rates down on a permanent basis, right? Not just a temporary one.
Hello, everyone. Welcome to another Mortgage Minute. My name is Matt Thomas. I'm joined by colleague Brian Dewald. Brian, it's good to know that there have been gains over the past 6 weeks that we haven't seen in a while, putting mortgage rates at a really good spot, at least certainly better than we had seen towards the end of last year. You want to talk to us about what you're seeing in the market right now?
Yeah, so, interestingly, we talk, you and I do almost every week, and is there any news to report? And it's like, gosh, all of a sudden it just catches up, right? We haven't met for a couple of weeks, and, when we look at the data for the last 6 weeks straight, we're seeing improvements kind of week over week. They're small, but we'll take it, right? All of those smalls sort of start to add up to some bigger stuff. And I've got a chart here that we'll show you momentarily, but yeah, the last 6 weeks has been pretty good.
Well, as we always talk about, we don't do a lot with, pinpointing rates, but we do have rates, just the general rate overall looks like it's under 7. It's been like that for the past week or so, which is good because that does, that's where we're seeing the gains. So, Brian, you want to go over, what was it, PCE?
Yeah, PCE, wanted to touch on a little bit. We're crossing our fingers. So PCE is the Federal Reserve's favorite measure of inflation. And a lot of times what we're looking at and trying to analyze and guess what's going to happen with these reports when they come out is we can look at and analyze what happened last year. So the one of the biggest pieces to PCE is the shelter component, and that equates for somewhere around 15 or 18% of the entire measurement, if you will. What we see here should replace a relatively large number from last year at this time, or January, I should say, of 2024. So we're hoping, crossing our fingers, that the rest of that all comes in. We're anticipating somewhere between 1 and 2/10 drop in PCE from last year's measurement, which would be more beneficial news for mortgage bonds.
It comes out on Friday, is that right?
Comes out this Friday. Yep.
Okay, good.
Yep.
Well, potentially heading into next weekend, we'll see an improvement in rates. Obviously, stay tuned. We never know, but that would certainly be welcomed for sure.
For sure.
Brian, you had mentioned that you've got something to show us. Do you want to go over that?
Yeah. So this is what we call the 30-year coupon at 6%. This is going back. This is a 3-month window. So this is basically showing us what prices of mortgages have been over the last 3 months. Green is good, it means it's improving, and red is bad. So we had a couple of drops here as far as prices, which make rates go up. So going back to January 10th, after that, we've seen mostly green in here. There's a couple little downs, but between here, which is January 14th, up to here at February 24th has been, relative. This is going upward, which makes rates go down. Yeah, so great news on the 10-year Treasury falling here over the last few weeks. We'll cross our fingers that continues to happen, and that'll be good news for mortgage rates if that trend continues here. So I'll go ahead and stop the share.
I would say the past 40 days or so, we've seen improvement. I would say that constitutes a trend, at least a micro trend, if nothing else, and look, things are pushing in the right direction. Certainly feels like it's in contrast to a lot of the news that we're hearing. We still have the people who think markets are going to crash and all these bad things are going to happen. We understand with prices having, continuing to go up, it continues to be relatively unaffordable, as a lot of people think, at least, to be able to get into a property. And so there's a lot of things, especially the news, that's working against us here. But Brian, that's not necessarily what you're seeing. Is that right?
No, we're seeing, and again, when we kind of look at these interest rates, I'm gonna sort of piggyback off what we've talked about in the past. We're still seeing lots of concessions come in for folk. The vast majority of the contracts we get, we have concessions in there. We really try and strategize, right, between you and me and our clients to do everything we can to get them the best deal, right? Which at the end of the day is normally payment. So we get strategical about how to do that, like we do with you and your clients. We've got a lot of folks that are coming in with contracts that are getting concessions, and we're using those concessions paid by the seller to buy interest rates down on a permanent basis, right? Not just a temporary one. So we're booking lots of.
Ask you, that's great news. So you've got permanent buydowns.
Permanent, and we're booking a lot of loans with a substantially lower interest rate than what we're seeing for national averages. Substantial, like a big drop. So not uncommon to see rates in the 5s right now.
Really? That's fantastic.
Yep.
So I was going to ask you, is there a 1% difference? Is there a 0.5% difference? It sounds like
Yeah, each scenario kind of depends a little bit, right? If we get a
Right.
fresh listing, if there's a listing that went on the market on Friday and we got the contract on Saturday, there's not going to be a lot of we educate folks there. But for a house that's been on the market for 6 weeks and hadn't had a price reduction,
Yeah.
those are prime for the taking to get a good deal on. So we strategically try and put a lot of that information together so that it makes sense for both buyer and seller to achieve the best possible outcome.
In general, would you say that the home buying market has paused, or are you having a good year?
We're having a record year, believe it or not. January, we kind of measure everything inside of COVID and then outside of COVID. Inside of COVID being, we don't even measure that anymore just because rates were so low. It's just insanity. February, here we are at the end of February. It's the 24th in 2025, second biggest February we've ever had, and the first biggest January we've ever had. So there's a lot of stuff out there right now where folks are moving and shaking. I like it.
Oh, that's great. And that may not always be reflective of everything that's going on or what everyone is experiencing, but certainly, if you're having a record year, there's got to be a reason. And certainly, being able to be creative with the way that you're structuring,
Yeah.
loans and deals. And, as you mentioned, there's concessions that can be had that can help people along. And really, there's just a lot of instruments and tools that you can come up with that are going to help people to find affordable ways to be able to, get into house. And we've spoken to this, but in general, what would you say, if you've got a difference of a half a percentage or so, below where rates are at right now, let's just say that they're at 6.75. If you can get somebody down to the low sixes,
Mhm.
that's a substantial difference in their payment, isn't it?
Yeah. Substantially better result from a payment standpoint than it is to take a price reduction on a house, right? If we get a $10,000 break, right, whether that's in price or concession, I can do the math 100 different ways from Sunday, and it always works out better to take the concessions. In fact, I've got a really neat platform and a program where I can share some of that data to see a side-by-side comparison between the two. But $10,000 is nothing to see on a break right now. We've seen as many as 25,000 or more in concessions to help folks get better
Sure.
rates.
Well, that's tremendous. So really, that's, I guess, the ultimate reason why we do this is that we want to let people know that there are ways to navigate this market. We are seeing that, generally speaking, numbers are being reported at the highest unaffordability rates that we've seen in some time, and there's no getting around that. However, and I say there's no getting around it, there actually sort of is a way to get around
Right.
it, because that's exactly what you're doing. That's
Right.
really what we want to invite you to do, is to reach out and to call and to let us help you strategize on ways that we can see if there's a scenario that would be affordable for you, so that you can make that move. The group of people sitting on the sidelines that is really kind of thinking, hey, I've got to wait until things are just ideal and perfect. They're not necessarily taking action and not realizing that there are opportunities to be had in this market. Once we see a significant rate drop, we've said it 100 times, there will be more competition. And then you'll be up against what everyone is hoping to avoid. Again, reach out. Brian's got all kinds of great scenarios we'd love to walk you through and help you find a way to get that home sold, a way to find the right property and to be able to afford it. Anything else to add today, Brian?
The only other thing I wanted to touch on real quick, Matt, is I'm working right now with a lot of investors who are looking at buying real estate. And a lot of them who have been told in the past that they couldn't get an approval done. We've got some really neat out of the box things that we're doing to help folks either refinance enough property and equity to pay cash for a new one, and or to help people that have been turned down by other lenders and banks just buy rental properties. And in some cases, we can get really fun and creative with some neat programs that we have access to. And in some cases, depending on the size of the down payment, we're seeing even better rates than regular conventional loans. So we're seeing a lot of these deals come together right now. If anybody watching's been turned down by a bank and want to look at some rental properties, some nice deals out there to be had, and we can help you structure some out of the box things to get you to the finish line.
You're speaking specifically to the people who maybe have a lot of money locked up in equity that they're not sure what to do with, or would like to put it to use somewhere else.
Yeah, or folks that are self-employed, right, that are looking for cost segregations and trying to figure out how to improve their tax situation. Some, maybe you're self-employed and you don't necessarily, you've got a really great CPA, so you don't claim everything that you could, which makes it hard for a standard bank or entity like that to lend money to. We've got some really neat, some asset depletion programs, some bank statement type programs that are really, really great for folks that are looking to invest in real estate.
Again, that's really essentially our goal here is to just have people reach out and if you're watching this, well, there's no obligation. We have a phone call, we have a chat, we get you connected to the right people to to just see kind of where you're at and see if there's anything that is worth considering for you in the future to be able to put your money to work or to be able to find the right property for you. And again, that's what we look forward to, and it's why we do this. So, Brian, that's great news. We'll hopefully be able to have some folks that we're talking to soon about this. And until then, I guess we'll look forward to the next report.
Sounds great.